5 stocks I'm buying in the month of August. Gonna briefly explain in this video what each company does, analyze their financial statements and valuation, and overall summarize why I'm buying the stock. We're not going to waste any time here because time is money. So if you like these videos, make sure to like this video and subscribe, and let's get started. Stock number 1 is Perion, P-E-R-I. The stock that I've been calling out for ages, hashtag PeriPals. This is an ad technology company that brings solutions to advertisers in search, video, and connected TV. Over the past year, they've developed a privacy-first cookieless solution to advertising that has generated amazing results, and the numbers show. So Perion just reported their earnings and it was absolutely amazing. Duran, the CEO right there, is the GOAT. They beat estimates, they raised guidance, pretty much been doing that the past 2 years. Revenue up 34%, adjusted EBITDA up 99%, cash and short-term deposits $350 million. The company has no debt on its balance sheet. They have great diversified revenue between display and search. And by the way, there's a supply partner of the year with Microsoft. As I mentioned earlier, they raised their outlook. Now they're confident in at least meeting or exceeding the high end of their adjusted EBITDA guidance. So their profitability is turning out to be better than expected, even though this is a bad environment for advertising. Lastly, on their valuation, a P of 17, forward P of 13. This is a discount to the S&P 500 average right now, as you can see on the screen right there. And the average S&P 500 stock is also not growing its sales or earnings as fast as Perion Network. I could talk on and on about Peri, but to summarize, I'm buying this stock because it has a low valuation, high growth, especially proven in a bear market and a recessionary environment. I see it having minimal downside and an excellent management team. Stock number 2 is going to be Meta, M-E-T-A stock. Many people know this as Facebook, Instagram, WhatsApp, and Oculus. Let me remind you that Meta has over 2.8 billion daily active users and over 3 billion monthly active users. This is a challenging time for Meta as macroeconomics are not very good. Ad budgets are being cut. Apple privacy headwinds are there. Meta, first and foremost, is a business predicated on selling ads.
Senator, we run ads.
Yes, they're spending tens of billions of dollars trying to figure out the whole metaverse. It's going to be some sort of better immersive experience when it comes to shopping, advertising, gaming, but it's still very early days and the stock is not getting any love for it. Meta stock is having one of its worst years ever, down 50%, and for the first time reported negative quarterly revenue growth. You can see the tiny little red bar down there. But let's keep things in perspective here. All companies deal with problems and stagnate before growing once again if they are a good company. This is stagnating at a high level, $33 billion in trailing income, $119 billion in sales. The PE ratio and the forward PE ratio are about 14, very low for the market. And considering its balance sheet, no long-term debt, and a very good ratio of assets to liabilities. And this is a recurring theme you'll see. These stocks, for the most part, all have great gross margins and profit margins. Diving deeper into the undervalued concept, you can see the communication services sector, which Facebook or Meta is in, has a PE ratio of about 18 and a forward PE ratio of 15. You'll also see that if you compare it straight to the technology sector that is trading at a PE of 27 and a forward PE of 20, it is considerably higher valued than Meta. This is putting Meta essentially at a 50 to 100% discount to many tech stocks out there. Overall, I'm buying Meta stock because I do believe that they will turn the business around. Mark Zuckerberg, call him what you want, think of him as you want, but he has been a great leader for the company. They do still have a big share buyback program. We saw the valuation is very low for the size of this company. I think the stock is easily going to go back to 200s or 300s. Stock has held up recently at 155, and I do see that as a tradable bottom. By the way, guys, if you're new to investing or you want to try out some of these stock picks for free, check out Market Draft. It's a new fantasy stock and crypto picking platform where you can actually earn real cash prizes for picking the best stocks in a certain time period and entering contests. It's all totally free. There's no deposit required, no annoying verification process. Check out the link in the description down below, and let's get back into the video. Stock number 3 is Ford. Ford needs little introduction. Most of us already know that this is a legacy historical automaker, but for many years, this company's financials and their stock was dead. That is, of course, until they started taking Tesla and the EV revolution seriously. Ford is being heavily into EV related ventures. They'll spend $1.5 billion at its Ohio assembly plant to build a new EV model introduced in 2025 that adds on to an $11.4 billion investment for battery manufacturing facilities. As for its Q2 earnings, Ford beat expectations and raised its dividend as the company sells more of its top models, which also happen to be more profitable models like SUVs. Their earnings per share was up 12 cents and their automotive revenue was up over $13 billion. And not to mention, Ford is indeed a profitable company. It is still really early days for Ford in its EV ventures. They only sold 7,669 vehicles in July 2022. That definitely pales in comparison with something like a Tesla. But they do have all these legacy vehicles that they're selling in huge swaths month by month. And truthfully, they would be selling even more vehicles if not for the supply chain issues that are preventing them from manufacturing as much. The demand is clearly there. There's a lot of demand and interest for their F-150 Lightning. That's why they're also sticking to their guidance for the full year. If we compare to other auto manufacturers with a $2 billion market cap or more, I see Ford as in a pretty attractive place. If the PE ratio is not that high, it's a fraction of Tesla's. That's a whole different argument, but I think combined with the low valuation starting point that a lot of these manufacturers have, because for a long time they didn't grow, but I see a lot of growth happening in the future. And when we look at the balance sheet, Ford does have a considerable amount of debt, and that's one thing that I don't like as much. But at the end of the day, if you net that debt and cash, you do still have a net cash position of $9.4 billion, and that's money that they could spend to fuel more growth for the coming years ahead. All that aside, one of the other big reasons why I'm buying Ford stock is because of its dividend. They recently raised it by 50% to pre-pandemic levels, and over a long term, if they can keep increasing that dividend, it's going to create a pretty big yield. It's already at 4%. The stock is up huge off of its bottom, so I'm buying lightly at the moment. If it does drop down, I will consider buying more heavily. Number 4 stock is Morgan Stanley MS stock. The company is known for its investment banking, participating in mergers and acquisitions, and IPOs. Of course, those have dried up in recent times, but they still have a very stable business because of diversification. They have wealth management services, in-house trading, and their E-Trade retail trading business. This past quarter, MS stock reported $13 billion in revenue and EPS of $1.39, which equates to about $2.5 billion in net income. That is a decline in both over from a year ago. But thanks to diversification, their business did not, decline as bad as it could have. So fixed income net revenues increased by 49%, while investment banking revenues went down 55%. And I see MS as a very stable business, especially if you look at the past about 10 years at least, with the revenue and net income on a steady uptrend. Furthermore, MS pays a very nice dividend that they just raised, and you can see the dividend history. This is not a company that has cut its dividend in recent history. It's gone actually from 15 cents per share to 77 cents per share. And that dividend growth rate over the past 5 years is actually about 26%. If you look at financials as a whole, that sector trades at about a 12 PE ratio. But in my personal opinion, most of those stocks are not as strong as MS, which is trading at a PE ratio of 11.5 and a forward PE ratio of about 10.9. One of the top dividends for a bank at a now increased rate of about 4% yield, and once again, a very high gross margin, profit margin type of business. Overall, I'm buying MS stock for some diversification away from tech. I'm buying it for the hefty dividend and the consistent trend of raising that dividend over time. Plus, they have a 20 billion share buyback program. And lastly, number 5 is MP Materials stock. MP Materials is a rare earth mining company. They own the Mountain Pass mine. These are literally materials that are the picks and shovels of the EV evolution. And really, they're using picks and shovels to get the stuff out of the ground. These are the materials that are part of the magnets, which are part of the engines, which are part of the electric vehicles. And it's a very profitable company. MP's profits are obviously highly linked to how this commodity trades on the market. You can see that pricing for ND basically fluctuates, but goes much higher over time. It's almost tripled and quadrupled in the past couple of years due to the demand for EVs. That's reflected in MP's financial results. You could see it's a very high margin business. Once again, revenue increased by 177% year over year, and 68% quarter over quarter actually for Q1. By the time this video comes out, they may actually have Q2 results already, but I'm sure they're going to be great. Adjusted EBITDA up 300% and adjusted EPS up 285%. Absolutely crazy numbers. There's a lot of things in the pipeline for MP. This is only stage 1. Stage 2 sees them be more involved in the refining process for those rare earth oxides. And then you have the magnet making stage where they're trying to really bring back the whole supply chain for magnets to the US. And they've signed up a huge partner for that. So they signed a long-term agreement with GM to be one of their major first customers for those magnets. And it's expected to ramp in late 2023 with magnets expected in 2025. And discussions are ongoing with prospective customers, maybe Ford, as we mentioned earlier. I really like that this is an alternative to play to directly investing in one single electric vehicle manufacturer when you can buy a company whose products are being used by everyone basically in the beginning stages of the supply chain. Because of its insane growth rates with sales and earnings, this does command a higher valuation compared to the rest of the market and compared to basic materials sector. So remember the S&P 500 average forward PE ratio right now is about 17. MP's here is about 22.7. I think it deserves that valuation because of how fast it's growing and how necessary it is to the whole entire EV industry. So overall, I see MP Materials as a very inexpensive stock. Automakers are scrambling to multiply their production. There are so many catalysts ahead for this stock. Combined with that growth and profitability, MP Materials, absolutely, I think it's a buy. So that's it, folks. Those are the 5 top stocks that I'm buying for the month of August 2022. Leave a comment down below what you guys think. Check out our Discord group as well, where we have live trading, a whole academy of videos, discussions, and alerts when we buy and sell different stocks. With that being said, I'll see you guys in the next video. Stay well and let's make some money.